Hey y'all, what's going on? So today we are going to look at mastering reversal chart patterns. And this is the video that goes with the blog that you can always click the link in the description in order to see that. So most people can recognize certain reversal chart patterns: double tops, double bottoms, head and shoulders, inverted head and shoulders. You have engulfing candles. You have different ones that most people can recognize. But sometimes people still end up on the wrong side of the trade because mainly they don't understand that the pattern doesn't predict what's going to happen. It reveals the change in trend as it develops. So you must understand what's happening behind the scenes in the tug of war between the buyers and the sellers to make sure you end up on the right side of the trade. So here I'm going to break down a couple reversal patterns that we can see quite a few of them right here in this one section. So one of the first things we're going to talk about is trending versus retracement moves. So every move there's goes with the trend, and then we get a pullback or a retracement. It goes with the trend, pullback or retracement. Doesn't matter if it's to the upside or to the downside. The retracement is the weaker move, and the candles are usually smaller than the trending move. Um, So what I'm going to do so I can get into that a little bit more is I am going to show you, if you cannot already see it, the head and shoulders on SPY. And this you can go back to December 7th, 2021. This is before we had our drop in 2022. So this is what was forming. So we had come to here November 21st, an all-time high. We had pulled back, price had came back up. We broke the high here, and I'm just going to put that there, make this one a different color. So you can see we broke the high on this candle, which was December 27th, about a month after we made that high, and then price consolidated before we got to move back down and broke. We came down, tried to retest that break, and then came on down. So right here is our head and shoulders. And let me point it out. So we have the left shoulder. That's this part. And sometimes you can have multiple left shoulders. We have our head, which is right here. Excuse me. The head is usually higher than the shoulders. It's not equal heights, it is usually higher. And then we have our right shoulder. And just like I said, with the left shoulder, we may have multiple right shoulders. We could have multiple left and only have one right, or vice versa. So the number of shoulders, it's not symmetrical. If we have three on one side, we're gonna have three on the other. It could be three and one, it could be one and four, however the market chooses to do it. And then the last part of our head and shoulders is the neckline. This is where the buyers and sellers really fight it out over who is going to gain control at this time. Now I'm going to use my little measure tool and go from here to this candle. Well, this one we broke through. That took 42 days, and the 42 days is including Saturday or Sunday. But when you look at bars, it was 28 bars, which is 28 trading days because I'm actually on the daily chart of SPY. And I don't know why it's not showing up here, but all right, that's where we are. So this is SPY. There we go. There's SPY on the daily chart. So we have a left shoulder, a head, a right shoulder, and a neckline. This is where they duke it out until, if this is going to continue this pattern, this is where the sellers lose, excuse me, the buyers lose control and the sellers gain control. So you need to understand it's a fight between the buyers and the sellers, and the buyers are exiting their position. The sellers are entering their position. And honestly, guys, this has happened simultaneously. The same people that were buyers are now exiting and becoming sellers. And when that happens, that's when you get this move down. Typically in a head and shoulders, you are going to get a move back up to retest the neckline. Now, it doesn't always make it up there. Sometimes it may stop here, sometimes it may stop here and come all the way back down. So you can see it made two, and if you want to count this candle, three attempts to retest the neckline. It couldn't do it. So price continued to move down. So at this point, this would be our trending move. This would be our retracement. This is a little consolidation. That's the trending move. That's the retracement. So the retracements are the pullbacks. So that's the first part of the move. So now I am going to close this off and we're going to get into the whether it's a head and shoulders or inverted head and shoulders, which the inverted means it happens at the bottom of a trend to reverse to go up. You get a series of either higher highs, lower highs, or vice versa. So here I have, here's my higher high. This is all-time high, January 4th, 2022. And then my next high is a lower high from this one. Now here's my lower low over here. This one did not break that lower low. Let's see here. I'm gonna just go ahead and put all these up. So this did not break, so it didn't give us a lower low because it was still higher than this low here. So this gave me a lower high. This gave me my first official lower low. This pulled up and gave me my lower high relative to this high. We had some consolidation. We still got another lower high relative to this high. This was a higher low because it's not lower than this low. So we didn't count this one. I got a third lower high. So I've got several lower highs before I got a lower low. I moved back up and I got another lower high. So if we're looking in an uptrend, we're going to have a higher high and a higher low. So that you can see here, this is a higher low, a higher high, a higher low, a higher high. This is where we start the shift. So that's the second part. We're looking at higher highs or higher lows, and then the passage of time. The longer a pattern takes before to form, the more significant it becomes. Why? Because people start to see it. And so people start to trade the pattern. So the longer it takes, the more visibility it gets, the more people start to trade the pattern. So that's your time factor. So, like we said, this was, I honestly forgot, 27, 28 bars. So, a little bit over a month, about 6 weeks as far as trading days go, that took to form. So when we finally got the break, we got a really nice down move. So those are your three components. And I actually have the head and shoulders indicator. So if you go to your indicators and put in head and shoulders, I actually have the head and shoulders indicator on, and it's not even picking this up, which is one of the reasons. If you saw the blog post, I actually had it on and was able to find some. But this is the reason you need to be able to visually see for yourself, because the indicators don't pick up everything. And this is like a perfect head and shoulders right here. It's just the indicator didn't pick it up. So, however it's programmed, which I mean, you may or may not be able to change in Pine Script, it was not able to detect this particular head and shoulders, even though I have it on. Another pattern we talked about in the blog was a double top, which is literally what we have right here. So we have our lower lows, excuse me, lower highs, lower lows. We go up, we consolidate, we come back up again. This is actually a double top, which is a reversal pattern. And we can see all that right there. This would be the neckline of the double top right here. And we can see that price did fall below. It came back up and retested, and then we went ahead and fell again. So a double top, you typically are going to have one top, a second top, and then I kind of like to call a little shoulder or a wing. So you typically will get some type of pullback before you get that final move down. This does not always happen. So that's why you have to be able to read in context of the chart. But how the pattern often works is you kind of have this, it looks like this. So you kind of have a left shoulder, top one, top two, right shoulder. This could be lower, this could be higher, it could be even. So that's how the double top pattern works. So we had a bearish pattern of a head and shoulders here, and then we had a double top here, and then we continued down with our lower low, our higher low. We did get a retest here. Now, the ascending and descending triangles, you do not see as much um, those. So I was not able to find one in this area. So, okay, the one that I found, there's one on Tesla, and we have right here, we have our higher highs and our higher lows that we're making here. And then we have this level right here. Now, these lines aren't perfect. So this is an ascending triangle. Basically, the sellers are holding price here, but the buyers are making higher lows, higher lows, higher lows, higher lows. Then we eventually break out. Usually there's some type of retest, and then it kept going. Now, it did not actually retest this level. We did not get the retest of this level until October 2022, but we broke out in July. So this is an example of an ascending triangle, and it basically means you're getting higher highs, higher lows, but the sellers or the bears, however you want to look at it, are sitting here and they're holding this line. But at some point, the buyers are going to have enough orders to be able to break through. And that's pretty much how it works. So those are your three patterns that we talked about in the blog post. Another thing we talked about in the blog post was 70 to 80 candles as far as helping the development time. So if we look here, and it's going to depend on your time frame, we've got 55 days, 36 bars. The numbers are not exact. They are not um how things typically, like there's nothing that's typical. So you can't really say for sure 50 to 100 or whatever. It's going to be a combination, going to be depend on the time frame you're on. So, but 70 to 80 is a nice time. Candles, or yeah, 70 to 80 candles is a nice range of when you can maybe expect a breakout of that area. But as you can see, this one was 36, 55 days, 36 trading days before we broke out. But you can also tell because we're getting close to the apex between this bottom trend line and this right here. You could see how did it get over? It gapped over because there was a good chance if it hit this level again, it could have went down. So what did they do? They gapped over the price, so they didn't have to worry about that. And this is why sometimes for me it's funny seeing these charts, because it's like you could just start to see what's actually happening. You could really read the story and start to understand what happened. So look what happened when we got back to this area. It basically pushed down because there were orders here that would have more than likely pushed price down. So to avoid it, they just gap price over it, and then it pushed it down over here. And then honestly, here we actually have a triple top. So top one, top two, top three. This would be your neckline. And so at some time it tried to come back up. This is one of those ones that did not make it. It tried to come back up and test the breakout. The neckline would have been right around here. Price tried to go back up and retest, couldn't make it, and came back down. So sometimes it does not make it. Every reversal has three components that we talked about: the trend and the retracement or pullback, higher highs, higher lows, lower highs, lower lows, and how much time that is passing while this pattern is forming. And the more times that passes, the better, because the more people see the pattern, the more people trade the pattern. The longer the setup takes, the stronger the potential move. So if you've got something sitting around for 3 or 4 months, you can best believe when it comes up out of there, it's going to be explosive. And you got to make sure context is everything. Um, you have to pay attention of where it's actually happening on the chart and awareness in the larger trend. And one thing that honestly, I'm not going to lie, I still struggle with, but if you can be patient and wait, and not get in early, my stop is typically hit because I jump in early because I can see these things developing. I've been watching for so long, I can see the development. And so sometimes I get a little trigger happy and click the buy or sell button, and the market hasn't showed me that it's ready yet. So do your best to be patient and wait for these patterns to set up, and then you can catch the reversal. It's not about trying to get it from the very top or get it from the very bottom. It's about making sure you are on the right side of the trend so that you can profit off the market movements. That's my time, guys. You guys take care, and I will talk to you soon.